I'm Peter Englund. I'm a professor emeritus of finance at this institution, and I've done work on housing markets, housing finance, banking crisis. So that's a requirement to amortize a certain fraction of your loan, currently started between 3% and 1%, depending on the size of the loan. They were introduced in response to a market development where interest-only loans, where you don't amortize at all, were becoming the standard in the economy. And they are not so much geared at individual homeowners as at protecting the financial stability of the system. So we were appointed by the Minister of Financial Affairs. And by we, I mean myself, John Hassler, who's also professor of economics at the university, and Martin Andersson, who was previously the head of Finansinspektionen. So the three of us are jointly responsible for the report. The remit was, on the one hand, backward-looking. We were asked to evaluate the measures that we have in Sweden, which is not only amortization requirement, but also a cap on the loan-to-value ratio. So we were asked to evaluate that from the viewpoint of its impact on financial stability. But we were also asked to come up with suggestions for reform of the system looking forward. We tried to think of this in cost-benefit terms. So on the benefit side, supposedly these measures protect financial stability. On the other hand, they have costs in the sense of restricting households, the ability of households to borrow and finance consumption, and in particular finance purchase of their own home. So in that balance, we found that the impact of financial stability is quite unclear, whereas the cost in terms of borrower welfare is relatively clear. So based on that, we think that you could reduce the restrictions. You can make the regulations less restrictive. The specific recommendations was threefold. One, to increase the loan-to-value cap from 85% to 90%. Two, to reduce the amortization requirement to a flat 1% from the top down to 50% loan-to-value. And third, to introduce a new loan cap on loan-to-income at 550% of household income. And the latter is we regard as a sort of backstop if there were to be a dramatic development of house prices and loans, that would put a stop to that type of process. The regulations are primarily directed to new borrowers. So they don't mean all that much to existing homeowners, although they will mean a reduction in the amortization requirements for some of them. And they are not meant as primarily as consumer protection. They are meant as tools to stabilize the economy, in particular to stabilize the financial markets. So they would obviously increase the demand for housing. When you need less money for down payment, you can demand a larger house, or new groups can get into the housing market. So it will clearly boost demand for housing. And in the short run, that will also drive up the prices of homes, because if that is sort of set in the balance between demand and supply, and demand increases and supply is fixed in the short run, then prices will increase. And that's of course a problem in some sense. But the higher prices will also stimulate new construction, And in the longer run, when construction comes along, the price effect will be dampened. So the reform is welcomed, is very welcome from the construction sector. They applaud it, whereas the regulators are a little bit more skeptic. I think the reaction was quite what one could expect, i.e. the builders and the households in general tend to applaud it, and also the banks, whereas the regulators are skeptical because they sort of feel that this might threaten financial stability. So I mean it is a balance between costs and benefits, and depending on what interest you represent, that explains your reactions, I think. So I think the reactions were quite what one could expect. No surprises really. We were appointed by the government, represented by the Minister of Financial Affairs, and so there were no politicians involved in the work. We had to assist us. We had a group of experts who were also present at the meetings, but it was the three of us who took the decisions. Do I enjoy this? Well, yeah, I do. I think it's challenging to try to apply insights from economic research, and I think economics as a science is quite policy oriented. So this is an opportunity to get one's academic insights to work to analyze a practical question. So I'm excited to see what will come out of this.